Hey everyone, Adam here to talk to you a little bit about how to improperly manage a trade. One of the hardest things I think about trading is managing the actual trade, knowing when to cut your losses, knowing when to take profits, move stops, etc. Finding the stocks is actually pretty easy. You know, you can go on shareplanner.com or Twitter and find tons of watch list items and picks, but when it comes to actual making a trade, you're usually left on your own to try to figure out what to do with it. Managing a trade can take a good trade and turn it bad, or in my case, it could take a great trade and turn it to simply just a good one. We'll look at ANW. I took this trade today coming out of this little base break, this little range break off that 20-day moving average. As you can see, the trade pretty much just took off from the morning. Let's zoom in here on a 5-minute chart. It took off in the morning, got in right around this level, and after that, it was just straight profits up and up and up. Got out my first half somewhere in this range. Usually after a couple of solid 5-minute candles, we like to go ahead and scale out half our profits, lock in some money, move our stop to our buy price here. That way we're playing on free money. It's going to be a profitable trade no matter what. After the morning, it began to flag here. Tried to break out here, failed it, and then finally it took back off, breaking out, moving higher, moving higher, moving higher. Now, I should have went ahead and scaled out some of my profits up here after another big run up after this breakout, because this should be considered just like another breakout like you already had. We consider this another breakout, but it's on the intraday chart, so we can expect a little bit smaller move. I should have scaled out. Problem is I didn't. I just held on. Stock goes up about 7-8% around here, and due to this week being such a strong week and a good week for me trading, you know, I'm used to hitting these 10%, 15%, 20% trades. You know, I was sitting here thinking to myself, this thing's got, you know, another 7% in it, another 6% in it. You know, this thing's going to get, you know, at least 10 to 15%. I ain't going to get out at 8, but, you know, that's what improper thinking is. I shouldn't have thought anything like that. You got to take each trade for itself. So I should have scaled out here and moved my stop up, or at least kept my stop the same. At least locked in some more profits. I ended up moving my stop right under this big white candle to lock in any profits. And as you see, I was quickly taken out after this major sell-off. The stock did end up basing out before it ended up breaking out again higher. But unfortunately, I got stopped out way down here in my last half, pretty much cutting my profits in half for the day. Not a great feeling. Like I said, it turned what could have been a great trade into a okay trade. I made pretty decent money, but not as good as it could have been. Next time, I'm going to keep my stop down here, let it ride. I'm going to scale out my profits here, or at least take full profits. Either way, if I didn't even catch this run, I would have still been happy just catching this run. It's still good money that I left on the table. Hope everyone can use this video to help you learn how to manage a trade. Try not to move your stop ups. Try to scale out on those positions, especially if you get a bunch of run ups, especially like this, you know, 5, 6 green bars. Solid push up higher on that 5-minute chart is a good time to scale out before we start to fade down a little bit more. So I definitely mismanaged this trade. I'll take a B- on the trade altogether, just because I did, like I said, I made good money. I hit that entry perfect, and I've hit my first target or my first scale out pretty good. But after that, it just kind of went to crap. So hopefully everybody can learn from that. Good luck in the future.